Binance stopped derivatives offering. With scrutiny mounting, crypto exchange platform Binance is set to wind down derivatives in Europe. Binance, a major digital asset exchange site, has recently announced that it would unwind its futures and derivatives business across Europe. Now, this strong move by the platform to dial back its product range is the outcome of pressure from the financial guard dogs extending across the world. Now, thanks for joining us at Stacking Stocks, where we'll be talking about why Binance is closing down derivatives across Europe and how it could affect Binanceans. Make sure to subscribe and hit the notification bell to never miss out on one of our videos. And with that out of the way, let's get started. For a quick take, what happened is that Binance has announced that it will no longer offer crypto derivatives trading to clients in 3 European nations: Germany, Italy, and the Netherlands. Effective immediately, new Binanceans from these 3 nations can no longer open accounts with Binance to exchange crypto derivatives. With respect to existing clients, Binance said, "As the crypto ecosystem evolves globally, we're continually evaluating our products and working with our partners to meet our users' needs." And after making these statements, the trading platform has not made any further comments in this context. Binance is also looking forward to closing its crypto derivatives trading offering across the European region in coming days. During the worldwide pandemic, Bitcoin and other digital currencies have gained popularity among retail investors and have surged in price as well. And this is what prompted regulators to put exchange stages under expanded investigation, despite the fact that most cryptocurrency trading is unregulated. Along with Italy and Hong Kong, regulators from Britain and Germany are stressing over consumer security and the norm of hostility to money laundering at crypto exchanges. Now, this has increased pressure on Binance, one of the world's largest exchanges according to volume. The European region is a very important market for Binance, and it's taking proactive steps toward harmonizing crypto regulations, which is a positive sign for the industry. That's what the exchange site said on Twitter. We understand that many regulators at local levels may have their positions on crypto, and we welcome the opportunity to engage in a constructive dialogue on local requirements. Since current users in Germany, Italy, and the Netherlands have 90 days to close any open derivatives positions, regulators in Germany refused to comment on Binance's move, while Italian and Dutch regulators didn't respond to requests for comment made by Binance. Regulatory pressure. Binance's exit from derivatives in Europe is its most recent exit from a particular crypto item after it stopped offering stock tokens. In late July, Binance announced that it would cease its stock tokens trading offering since it had to confront expanding scrutiny from regulators around the globe. Recently, Binance CEO Changpeng CZ Zhao made a statement saying that the crypto space is now relatively heavily regulated and that Binance needs to make a pivot from a technology startup into a financial services company. He proceeded to say that Binance is hoping to set up actual headquarters in numerous jurisdictions as regulators are demanding to see offices and legal entities. Up to this point, Binance says it's worked in a decentralized way. In any case, given the mounting regulatory pressing factor, Zhao is indeed open to having a new Binance CEO with a very strong regulatory background. Malaysia's securities regulator has turned into the latest guard dog to join the line to target Binance just last week, calling it down for illegally operating a digital currency exchange in the country. UK specialist Crypto Compare said in June that Binance was the biggest derivatives exchange in the world with volumes of $1.7 trillion, which is down around 30% from a month earlier. Simon Tracy, who's a senior attorney at Linklaters in London, said monetary guard dogs have more scope to get control over crypto firms offering derivatives as futures, and other such items ordinarily fall into their extension. Digital currency spot trading, conversely, for the most part, remains unregulated. The regulators have more scope to take swift action on the derivative space, he said. They don't have to wait for the legislative process to unfurl to bring derivatives into scope. That's what would have to happen to take action against spot trading. Binance CEO Changpeng Zhao said that he needed to further develop relations with controllers and said the exchange would look for their endorsement and set up local headquarters. Binance has additionally quit offering cryptocurrency margin trading, including the Australian dollar, the euro, and sterling. Market Whales has said that Binance, starting to quit exchanging derivatives along with stock tokens, and now Australian dollar, euro, and sterling, might add to bigger worries about the fate of cryptocurrency derivatives trading for retail players. A huge amount of money in crypto market is floating around exclusively because of the existence and availability of such products, said Joseph Edwards of Enigma Securities, a digital currency cryptocurrency broker in London. Binance has crowded out large sections of the derivatives market over the last couple of years. If their retreat continues to deepen, the medium-term impact is unlikely to be positive. Right now, Binance is trying to pass extra regulatory tests and checks to turn into a full-scale official financial organization. President Changpeng Zhao is even prepared to step down from his high-ranking position if his institution can track down a superior candidate with regulatory experience. It seems Binance is not holding back on winding down risky investment products. Regulators of the financial market in the UK, Japan, Thailand, Poland, and the Cayman Islands, and many more have either warned the trading platform or have taken legal steps against it. WazirX, a Binance-owned exchange, is also being investigated by authorities in India to find out whether it was complicit in a supposed tax evasion scheme led by betting apps, which gathered more than $134 million in the previous 10 months. The Enforcement Directorate is researching claims that Chinese-based betting applications laundered a portion of assets through WazirX. In the meantime, Binance CEO Changpeng Zhao recently said that the management is thinking about taking Binance's U.S. associate, Binance US, and taking it public, but plenty of underlying changes are required to make that move. President Changpeng Zhao stays optimistic about the future of Binance despite the regulatory issues that's being faced by the exchange. He has of late revealed that Binance US, which works independently from Binance, was hoping to open up to the world. He said Binance US is looking at the IPO route. Most regulators are familiar with a certain pattern or having headquarters, having a corporate structure, but we're setting up those structures to make it easier for an IPO to happen. Despite stopping derivatives and the regulatory crackdown, Binance has great plans for the future. But it doesn't mean the exchange is entirely safe. With the increase in regulation, it might have to stop other products as well. But it seems Binance is ready to take any actions it needs to in order to end the crackdown and fulfill its aim in establishing itself as a successful exchange site no matter the obstacles. Now let's wrap up this video with a couple of questions for you. What do you think is the next move to be played by Binance to ease the tension with the regulatory bodies? How hard will these actions being taken by Binance impact the Binanceans? Let me know in the comments section below. If you enjoyed the video, please make sure to give it a like and subscribe to our channel. See you next time right here on Stacking Stocks.